morning, everybody. Very excited to present to this group today. Not easy to fill in for Gary, given his impact and work over the past 35 years, but happy to step in. Echoing what Governor Hochul said and furthering what Rob will talk about during his remarks, we see a very vibrant economy on its way back from where it was, just 12 to 1 to 2 years ago. We'll continue to see that. I think we'll continue to see that growth going forward, as I'll kind of point out over the next couple of slides. But we all, as business leaders, have to deal with some potential issues that we see, and we'll kind of talk through those. So we go ahead to the next slide. When we look overall at the big picture, we see really three things that kind of add up to a fourth thing, which is inflation. So we'll kind of talk through each one in a little detail. First, and I'll probably cover this in the most detail, but I'll kind of cover it quickly here, is what we're seeing in the labor market. I'm sure everybody sitting there today has had to deal with this over the last 12 months. We continue to be short on labor, as evidenced by the number of open jobs, and then just the overall labor force participation rate. And secondly, the cost of that labor continues to increase. Given the work from home, the overall inflation environment and things of that nature, it's difficult to find people, and then to find people who fit into your business or the role you're looking for. Secondly, we continue to deal with supply chain disruption. We've all heard the stories, I'm sure read in the journals about the supply issues we have. The most easy example to find is try buying a new car these days. A chip shortage that exists continues to create problems for that industry that probably won't recover in terms of getting back to what we used to think of when buying a car. Go to a lot, see 6 or 7 of the one you like, and then kind of pick the right one you want. That may take years to kind of right itself, given the current issues we have. And you also have to think about, it's not just the end product, and like I said, the car is a good example. There's other parts as well. It's not just the end product you see that's causing issues. It could be components to that product, right? So it's the chip issue in cars. You could think about anything when you go to the supermarket and you see there isn't some kind of staple that you've been looking for. It may not be that the actual yogurt or cream cheese is not there. It might be something the packaging or something else that's causing the issues. Hopefully we'll work through those and make those work for us. Third, deposits at banks, whether that's commercial or personal, at an all-time high. People have stored and kept cash on their balance sheets or in their accounts for a couple of reasons. One, they needed to build up that cushion for one reason or another. Or in the cases of many businesses, there weren't really many alternatives to deploy that cash. They were holding off in terms of investing in their own businesses for one reason or another, or investing in the market, especially in very safe liquid assets, is just not worth it. Going out and getting a basis point or two on deposits isn't, going and try to find an extra basis point or two, given that risk, they wanted to remain liquid. You put those three factors together and you get what we're really feeling now, which is inflation. Everything basically costs more, whether it's because of the labor shortage and wage costs driving up, the end product, supply chain issues, or just the overall demand creating that. We see inflation, especially over the last few months. That seems to be one of the headlines that we see. There's an expectation that'll start to diminish over the first quarter of next year. But it's definitely something we're keeping track of as we move forward. And obviously, if you've seen, the Fed is very cognizant of what's going on. If we move ahead to the next slide, we'll take a look at, we talk about what's going on in terms of the labor market. It's interesting. We still haven't gotten back in terms of private employment back to where we were pre-pandemic. We still have a couple million jobs to recover. But I don't know that that's because those jobs have disappeared, or excuse me, it's a combination of those jobs haven't necessarily disappeared. It's trying to find people to fill those jobs. If you look, like I said, just under 2%, which is probably around 3 million jobs that still need to be recovered. Yet what's odd, or what's interesting, is there are more jobs available than there are people unemployed. We usually talk, there's 5 applicants for every open job. That's completely changed and gone the other way. At this point, there's a job and a half for every person looking for a role. People, jobs are plentiful. Doesn't matter. You see help wanted signs either, at any business you go to or go to any job board. People are looking for jobs, and we have people who are willing to move. The portability of jobs today is different than it was, say, 24 months ago. It's not uncommon to see someone, especially in, say, Syracuse, take a role in a city such as Atlanta or Chicago. They can work from Syracuse, keep their current way of life, and don't have to transfer to a different part of the country. Maybe they have to go to Chicago once or twice a year, but they're willing to do such things like that. And then you ask yourself, well, what else is kind of driving this? And if you go to the next slide, we'll look at labor force participation. People are, in general, not everybody's gone back to work. There's a couple reasons for that. In terms of the crowd 55 and over, that's a key part to the economy. We talk about different parts of these groups, and these were people that filled a vital role in the economy, and they haven't returned. There's a couple reasons why, I think. One, they have to feel safe in their environment, especially if they're, immunocompromised. They want to make sure that they don't get sick. They want to stay healthy. And so they've kind of decided that until they feel that way, they'll stay out of the job market. Secondly, despite all we've seen on the ground, the stock market has performed fairly well. And if they remained invested in the market, they could have come out and said, I've got a large enough nest egg. I don't need to get back to work at this time, and I'll wait until, I think I have to. At the younger age level, we've seen it's pretty much recovered. There's only a little bit of group. I think one of the main reasons that group hasn't necessarily come back is they've kind of structurally figured out a way to change their spending habits and their life habits to not have to go back. It might be the decision to stay home and raise children, and they've been able to figure out how to live off of a single income if need be. When we look at it more by education, again, we see that the bachelor's group is higher, has tended to recover or stayed pretty steady, but we haven't yet seen it from those with a lower education level, at least by the standards of being a high school graduate. Those jobs, obviously, people were obviously helped by the unemployment insurance and how long that lasted. And that provided, a decent cushion for those in that group for quite a long time. As those policies have changed and expired, we expect that group to continue to come back to the labor force, again, assuming they can find a wage that they feel is worth working for. And that's going to be a challenge that, this group, especially as business leaders, will have to manage as we go forward, is managing that difference. Moving ahead, as I said, there was two kind of sides to that coin. One was just the overall shortage. The other side is wage growth. It's getting more expensive for your employees. Their wages are increasing. This kind of looks at it on a 2-year lag. So if you compare Q4 of 2021, you're kind of comparing that to Q4 2019. But on an annualized basis, wages are up almost 4%. That's obviously one of the largest growths we've seen in the past 15 to 20 years. Employees again are demanding a higher wage. They're getting it. I deal with it every day on my side in the banking standpoint. Especially those in that I would say in the group that's in the 8 to 10 years out of school, they are in some high demand overall. That is a group that has been most transient. I think they're a group that is looking for that next major step in their career, and they've found roles that fit that need, and again have improved their quality of life at least through their earning potential during that stage. Moving ahead to the next slide, we start to focus a little bit more specifically on Syracuse and the central New York market. We see that you guys are mirroring a lot of what we're seeing overall in the economy, the national economy. Overall private employment is down. We see that. Unemployment is very low, and that the workforce again has not necessarily recovered to where it is. I'm based in Buffalo here, and so Syracuse and Buffalo have very similar traits. that labor force again is down fairly significantly. But again, if you think about the aging population of upstate New York, we have seen, we're trying to hold on to, but we definitely have an older, we skew older on that graph. And so again, when older, that retired group decides not to enter the workforce, that really hurts economies like ours in terms of filling roles and filling jobs. If we move ahead to the next slide, but when we break it down even a little further, we look at Syracuse in more detail. There's good and bad. Certain industries have held up pretty well. Businesses, back office, business jobs have held up very well. Transportation and warehousing, right? This is, everybody has switched their buying patterns. We all have, or just about all of us have, Amazon Prime or something of that side, whether that's the delivery services or whatever. We see Amazon Prime trucks, UPS trucks on our street all day long dropping off, and we've changed our buying patterns. If you had said 5 years ago, you'd buy your, almost all of you would be buying groceries online, or, the Prime truck would be there every day dropping off what we would consider everyday goods, people would probably have laughed at you at that point. But it's completely changed the way we've bought, and this industry is one spot that's obviously felt the benefit of that. Manufacturing held up pretty well. Usually that's one of the ones that struggles, but it's come back pretty well, relatively speaking, especially as I think companies have figured out that sweet spot in terms of understanding where they need to modernize and the level of staffing they need. They're also probably a little bit aided by the fact that it tends to be somewhat of a union environment, and obviously that the stability in that labor force. On the opposite side, things that are continuing to struggle, leisure and hospitality. That's a combination again of finding the right work at the right wage and just overall demand. People aren't going on vacations. Hotels are not filling to the level that they were in that nature. Healthcare, we all know, and previous speaker talked about the challenges they're facing in the healthcare field, and I'm sure they'll come through it. But again, it's a place that is difficult to sled through right now. And then retail trade, again, when you think about the wage situation there, getting people back to work in those areas is definitely something that we need to continue to focus on and see. Moving ahead, I won't spend much time on this one. It's just to show that Syracuse is, whether you're looking at it nationally or just very specifically in Syracuse, they're not immune to anything that the overall economy isn't dealing with. Wegmans, obviously one of the best employers in the country, nationally recognized continuously by Forbes for their work in terms of best places to work, is struggling to find employees, looking in job fairs. That's just commonplace everywhere. And when you see that, you realize how much of an issue this has become. Other issues that we've faced throughout the economy, whether it's locally or nationally, have just continue to manifest themselves. Moving forward, just a couple of quick slides on how we compare to the overall, to the rest of the state. Unemployment rate, again, right in the middle there, continuing to go down. I saw even an article this morning specific to Buffalo about, the unemployment rate, I think, has dropped even lower than what's on this one, on the slide here, as again, there just is, if you want a job, you can find it. The issue tends to be more the participation rate and less the amount of jobs that are available out there. Private employment, I think, it just is a little bit of a timing issue. I think Syracuse, again, aided by some of the things that Governor Hochul talked about in her opening remarks, some of the things Rob will be talking about it during his remarks, show that Syracuse and that CenterState area is primed for quite a remarkable uptick over the next couple of quarters. We move ahead. What's been interesting too is I found this a little interesting is population has started to kind of gain in more of the urban areas. We saw growth in Buffalo, Rochester, Syracuse. You see the blue there. They tend to be concentrated around cities again. That's amazing. I mean, you look in talking with some of the local people in Syracuse, and then I know what I've seen out here living in Buffalo is there's a real renaissance to wanting to be in an urban setting. You know, in our Buffalo area, housing in either right outside of that central business core, but still a part of the city, or even just in that downtown core, is growing tremendously. It's amazing to see, and I know the same thing's happening in Syracuse and other areas, is that redevelopment of residential areas, you know, especially formerly kind of commercial or, you know, urban areas is happening. And when we see that even in, if we go to the next slide, excuse me, we see the cities, especially you look at Syracuse, growing faster than Onondaga, city of Buffalo growing faster than Erie County. You see that the growth is definitely coming back to the city. People, especially fresh out of school, recent graduates, you know, they want to live, you know, in an urban setting, in that maybe they didn't want to. They all want, you know, and companies have adjusted to that. We've seen more urban stores, you know, finding ways to service that group. Also, again, we go back to, it's easy to go on and prime things and get it sent to your house, where before you would have to try to figure out a way to get that product, you know, bring that product in. Now it's, you know, a handful of clicks and it's at your door within 2 days or even the same day as needed. We move ahead. You know, so in summation, you know, what I think of is this is, when we look out forward, the key for business leaders like yourself over the next 12 months is going to be balancing a couple of different things. How you balance that, the employee, it's a lot of it is centered around the employee. And, you know, I really do think that the idea of, for those that have this type of a workforce that comes in Monday to Friday, 9 to 5, that paradigm has to change. That's probably going, quote unquote, a little bit of the way of the dinosaur. Certain businesses obviously have to live that way because of the nature of the business, but where that's not the case, how you manage that employee and how you deal with that change is going to be important. And then, you know, at the bank, we talk about being the best, you know, being the best place to work for our employees, being the best, you know, the best bank for our customers, and then being the best return for our shareholders. It's that kind of mentality I think you have to think through as business leaders, as well as how do you balance those three things? Because it is truly a balancing act. If you pay everybody, you know, top dollar, well, you might not get the returns you need as a company. If you know, don't bring in the right employees, your customers may struggle or not, you know, find you in the favor they did. So, you know, how you balance those three things as a group over the next year, I think will be important. And then, like I said, your optimism is great to see. Like I said, Rob will touch on that in the next section. But there's a lot of positive I see going forward for this economy as we move ahead in 2022.